I literally just made an hour-long video going over different stocks and go to check it out before uploading and find out that I recorded the wrong screen the entire time. So I am going to fly through this video as fast as I absolutely can because overall I'm a little irritated by what happened. So we will start with SPY on a daily chart. Actually, I want to start with QQQ on a daily chart. In last night's video, after this green day, remember it went up all day yesterday. In last night's video, I discussed the idea that due to where price had gone yesterday, I was not sure that the selling was done. I could see a very real possibility that we would get further downside and a gap close, and then we would look for buyers to step up down here near 612.50. Um, and that was the idea. Obviously, that's what happened today. We had mass selling in the market today. I did catch the gap fill trade on QQQ today. Worked out beautifully. Um, I mean, huge, huge, huge trade for me. Absolutely amazing. So, the base case on QQQ, despite the fact that we have closed below the daily 20 SMA, is will buyer step up right here because this is still a reasonable location for a higher low on the daily chart. So can we reclaim the daily 20 SMA, come above this 616 level, get a higher low above, and then go long to catch us back towards the upward direction. That is the base case. Um, if that doesn't happen, if selling continues, lower highs below 611.40 should head down towards 606.65 for tomorrow. But again, base case is consolidation here or buyers step up here and higher low above 615.90. Let's head on over to SPY. Let's take a look at the SPY daily chart. Zoom in here. All right, SPY has a little bit more red flag stuff going on here. The reason I say that is the ideal location for a higher low would have been 673.50 or 672.65 being the worst case. We closed significantly below that. So all we can hope at this point is that maybe this is a bear trap. And how do we find out if this does end up being a bear trap? Well, we look for potential consolidation between 673.50 and 669.65, probably not taking any trades in that range. If we can break above the 673.65 and get a clean higher low above that with bullish market internals, then probably a bear trap and we can look to go back long. Um, but if that doesn't happen, any lower highs below 669.65, target 665.25. The 50 daily SMA is right there. I would definitely not try to run shorts lower than that. I would want to see what buyers do when we hit that 50. Let's look at IWM. Come on, daily chart. All right, IWM is an ugly chart. This is not something I am actively trading right now. I am only looking at it to see how it could be affecting the S&P 500. It did break down through the lows of this previous bounce range. We have come down here quite a few times when we were in this bounce range. So it's not necessarily the end of the world, but the fact that we closed below that is definitely a bearish data point. So can we recover back inside this range? Then not a massively bearish data point, but if we continue below the low a day and stay below this 247.40 level, then bearish data point going forward. Okay. Um, Look over here on the left-hand side of the screen. Hopefully you can see today SMH down 2.34%, XLK down 2%, XLC down 0.9%, XLRE real estate down 0.5%, XLY down 2.3%, XLB down 0.5%, XLF down a little bit, XLU down. The only one that was up at all was XLV, and that was just barely, hardly at all. Really, it just didn't go anywhere. TLT bonds, that did move to the upside. So this whole entire sector thing is a major red flag, but it is only one day. So it's not like we're looking at this on the week, and it is only one day. But the point is, we saw no rotation into other sectors today. The sell-off was market wide. Okay, so that's a big red flag. I want to take a look at HYG bonds or junk bonds. Okay, we did get a hammer on junk bonds today, so that's potentially a good sign. We didn't really go much of anywhere with it, though. It's not like we had some huge recovery or anything like that. If we look at the hourly chart, we do kind of got this potential double bottom looking thing on the hourly chart. So if we can come back up in here into this gap on HYG, that would support the thesis that we're heading back in the upward direction in the market. If we end up losing this level right here, 80.15, I would suspect that selling continues in the market. So just something to take a look at. LQD, corporate grade credit spreads. We also got like this kind of double bottom. We also gapped up on this today and held the gap up. So that's a good sign. Potential double bottom, gapped up, held it. Can we get into it and start closing this gap? If so, that's good for the market health, and maybe we do see some recovery. Um, what else do we want to look at? So a lot of red flags, though, everything from bonds to all the sectors selling to we are way down here on HYG and LQD. And just if you've been watching the videos for the last couple of weeks, even as we were gapping up to new all-time highs, I was saying, hey, look at this chart, major red flags over here. Look at market breadth, major red flag. If NVDA, Palantir, if these stocks start to pull back, we're at risk for a major pullback in the market. And sure enough, what happened. So that's why it's important to watch these things. If you go back and watch those videos, or if you never saw them, go look, because the red flags have been there and I've been saying it all along. Let's take a look at the Hood daily chart. Hood sold almost 11% today. Oof, that's hardcore. Got this big old massive double top looking thing on Hood. Let's take a look at the hourly. A trade idea I posted. I don't know if it was last night or I posted it the day before, but it must have been the day before, I think. I said any lower highs below 135.61. There's mass thin structure over there, and it would be a great short. Let's take a look at a small time frame to see if there was any good entries on that. And what do you know? Just after market open at 9:48 this morning, you could see we came back down, pulled back up, got a little 2-minute hammer off there, broke the low of that hammer. That's where I would have entered. I would have put my stop above VWAP up here and targeted the next levels down being 132.40 and 129.40. So that was a very clean setup that could have been taken. I didn't catch it, unfortunately. I believe I was in Microsoft at the time, which was an excellent trade today anyway, so that's fine. But perfectly clean setup on Hood to take it short this morning. Thin structured left-hand side. Market internals were bearish. The market was bearish. I mean, and this is what I would consider basically an A+ setup. And also factor in the fact that it was a setup we were looking for. It makes it, the perfect setup. So that's the point of these videos. That's the point of pre-market and after-market analysis, is to find these setups so that when things happen in the market, you know what you're looking for, exactly what you're looking for. And when and if that happens, you can execute. And you don't have to be like, oh, what do I do? I don't know. Maybe should I take it? Shouldn't I take it? No, this was pre-planned. You saw this coming as a potential, as a probability. So this is why you can't just wake up in the morning, come to the trade desk and expect to win. There is a whole lot of work that comes with winning, a whole lot of preparation. I'm doing it every morning for more than I need to probably before market open, and probably a little bit more than I need to after market close. And then to top it off, I'm only trading the first hour to 2 hours of the day because that's when the best setups occur. And I have found that I have pretty good win rates the first 2 hours of market open. And after that, something happens to my mind and I start making bad decisions and I start giving away profit. So first hour, first 2 hours, after hour preparation, pre-market preparation, it pays off. Um, so going forward on Hood, what can we look for? Well, we broke below the 50 SMA. Any pullback up to 129.40 and rejection of that level with the 50 SMA there. I would look to short back to the low a day and beyond. We still have thin structure to the left-hand side for an eventual target of 121. Another way to take that might be a lower high below yesterday low a day. That is the more aggressive way to take it and more dangerous. Let's take a look at AMD. AMD, okay, daily chart. All right, AMD has pulled back to a good location for a higher low on a daily chart. The best spot would have been 240.30, but we're not too far below that. Not so far that I'm screaming it has to crash. If you were to draw like an uptrend line, we're still basically in the confines of that uptrend. So what happens tomorrow kind of tells the tale with AMD. Do we recover this 20 SMA, get above 243.25 with a higher low above? Then you can look to take a long. We got perfectly beautiful, clean structure to the left-hand side. So that would be a good setup for a long if also at the same time the broad market was recovering as well, then this might be a good place to look for that trade. Otherwise, consolidation in between here between 243.25 and 235.15. I am not touching it. Mm, Lower highs below 235.15. Short targeting eventually 226.37. And just so you know, when I I'm a little different of a trader, but when I call out a target, I'm not, it's not necessarily true that it's gonna hit the target every time. And I am really just catching that setup. And then when it gets to like 1, 2, risk reward ratio of 1, 2, something like that, I'm selling half the position, selling another quarter at 1 and 3, and then just really just hanging on to a small portion, very tiny portion of it to target. The reason I trade like that is one, because it's better on my mental, and two, because the win rate is better that way. I think this level might be slightly off. Let me fix it. There we go. So below 235.45. Um, let's take a look at Palantir. I know Michael Burry is just happy as possible with Palantir. Uh, Buying massive amount of puts, and since the moment that went public, it's done nothing but sell. Uh, I have to pause my recording because I have some audio doing something crazy. Hold on.
There I was.
Okay, I'm back. We're looking at Palantir. So what happened on Palantir? We had this massive bounce range right here. It finally broke out. We got a look above and then a fail, and now we're back at the bottom of that bounce range. So 175.15 is the main bottom of that bounce range, but you can see that we have stretched down to 171.50 a couple times. So I would not consider shorts unless we get below this 171.50. So lower highs below that, I would probably consider shorts. Otherwise, the base case is it probably stays within this bounce range. Maybe buyers step up here, maybe they step up here. It's kind of what I'd be looking for. But as far as for me to get back involved in this thing to on the long side, I would not even look at it until we got above this level of 186.50. So just kind of putting Palantir on the back burner unless it gets below here or above here. NVDA. All right, we are looking at the daily chart. A couple nights ago, I posted a trade idea of a lower high below 2 or 202. That worked out perfectly yesterday. I did catch that trade, and then it ended up closing at the perfect location for a higher low on a daily chart, 195.25. However, that's not what happened. We ended up selling off again today. So let's take a look at the hourly chart, see how we could think about getting involved with this. Mm, I mean, if you got a lower high below this 186.85, you could scalp short to basically 185. Not a huge trade, probably not even worth taking. Um, if for some reason we get back above 190.6 and recover the 20 SMA, I would probably entertain a higher low to the long side, targeting eventual target of 195.25. Um, I would entertain that in conditions where market internals are bullish, where SMH is bullish, where the market's in recovery mode. Okay. Let's take a look at Tesla real quick. Take a look at the daily. Tesla daily is just absolutely ugly. Zoomed out like this, I guess this kind of looks like some really weird, ugly bull flag. Just really nasty in here. The only way I become interested in Tesla really is above 470.85 with a catalyst, with high volume. Um, we do kind of have this head and shoulder, shoulder, head, shoulder, and a neckline right here at 440. So you could, in theory, entertain shorts, lower highs below 440 to target short trades, Amazon. Take a look at the daily. All right. Uh, so with Amazon, we had that big gap up after the OpenAI deal. We have finally pulled back to a level where there is previous price action. 242.50. And looks like we have a sign of buyers stepping up right there. So base case is we are looking for a higher low on the daily chart. We are looking for buyers to step up at 242.50. How do we get involved on a smaller time frame? Well, we would want to see price get back above 245.50, get a higher low there, catch it to the long side. Um, if that doesn't happen and we for some reason end up getting a lower high below 242.50, that's okay for maybe a potential short trade to target a little bit more of gap close, respecting levels at 239.85, 237.50, etc. But base case is looking for buyers to step up here. You can see that right on the rip this morning, buyers did step up there. You can see that in this hourly hammer candle. So that remains to be the best base case. Meta, whatever. Take a look at the daily. We're way below the 200 SMA. Um, no signs of capitulation on the selling yet. We have several gaps below us that we could potentially close. Any lower highs below 618. Target that gap close. We didn't quite close it today because if you look at the hourly chart, buyers started to step up inside this gap a little bit. You can see the wicks at the bottom of these hourly candles. So we are seeing some signs that buyers are stepping up in this area, but do we lose it and end up closing this gap to the short side becomes the question. Could definitely happen. I'm going to set an alert for crosses below. If buyers do step up, um, you could dangerously attempt to scalp some longs above 626, but dangerous. There is thin structure, but it's in a downtrend. So that would be with extreme caution. Microsoft daily chart. Um, I know I've posted some ideas on Microsoft of lower highs below 506.50. We opened below that this morning. Um, and I caught a lower high below, I think it was below 503 and wrote it down to either 550 or maybe a little bit further. Can't recall, but regardless, I had a massive trade on Microsoft today and spent no time in drawdown on it. And it was just pushing down the whole time. Probably should have held on to more longer, but you know what? I had a nearly 100% return on that trade, so not complaining. Do I want to move this level down? Let me look to the left. Way to the left. Oh, oh my God. Ugh, the hell? I think I want to move this level down a little. All right, any consolidation between 494.55 and 499.85, I will be avoiding. Definitely in a downtrend. I think the best trade on Microsoft would be some type of move back up towards 506.50 or 505.75. Some type of move back up towards here and then look for sellers to step back in up here. That would be the best trade on the short side. And that's probably most likely what I'll be waiting for. Take a look at Apple. Through all this market-wide selling, Apple has maintained really nice relative strength. It hasn't done a whole lot. However, it's holding up. It's not selling off with everything else. That tells me people don't want to sell their Apple, okay? So that tells me this thing's probably going higher. What else tells me that? We have an overnight all-time high way up here at 284.85 that still needs to be repaired. So the dangerous long is higher lows above 273. I would really look for a push-up, pull back, then try to catch the long when buyers step back up on the pullback at 273. Or any higher lows above the all-time regular hours all-time high at 277. And eventually targeting this level way up here at 284.85. I would imagine that it could take some type of catalyst for this to play out, or recovery starting, or bullish momentum in the broad market at the same time. This might be a good place to look for longs in those situations. Let's take a look at Google, because Google is the other name that's had relative strength through the sell-off. In fact, the charts don't look all that different, other than, yeah, Google also has an overnight all-time high way up here that still needs repaired up here at 298.90. So Apple and Google have very similar charts, and I would treat them pretty much the same. Higher lows above 287.15 for the aggressive trade, noting that it didn't work out today. To target the regular hours all-time high of 291.65, and higher lows above that to target the overnight all-time high of 298.90. Note the relative strength in Apple and Google, and really also in Amazon, now that we're talking about it. And another one would be MU. So that's all I got for now. If you're not journaling your trades, using tags to tag your trades with things like completed pre-market routine, or FOMC day, or just, see strategyforgejournal.com, click on Learning Center, click on tags, and see all the things that you can use for tags. Because they're very important to use in your trading. So you can collect data sets, and then you know that when a certain event happens in the market, what your expected value is for the way you trade. And that'll tell you, should I trade this certain event in the market or should I not? And so many other things that it can do for you. I'm not going to sit here and just try and pitch it. Just go to strategyforgejournal.com, click on Learning Center, click and read around to see how it can improve your trading, because it definitely can. And you can use code strategy for 6 weeks free. And if you don't like it and it's not helping your trading, well, then cancel. Simple as that. I will see you in the next one. Have a good one.
Always one pip away!
There I was, a struggling trader,
Climb, baby!
always on the edge of almost becoming profitable, but still making the same mistakes day in and day out. My mom
When are you gonna
always
grow
nagging
up?
at me.
Do something with your
Finally,
life.
I discovered technical
Technical
analysis
analysis.
wasn't
I've
the
been
problem.
doing this for years.
Trading
I know it's
psychology
not gonna
books were
work.
not the
I need
problem.
better
I was the
self-discipline.
problem. I wasn't tracking my data and using it. This kept me in a losing loop. Then I discovered Strategy Forge, a journal that had custom tags, built-in artificial intelligence analysis, strategy playbooks, smart goals, and all the analytics I would ever need. Finally, I could afford that diamond grill I always
From
wanted.
Edge Dweller to Bling Boss, StrategyForgeJournal.com.
Use code STRATEGY for your first 6 weeks free or 3 free months on an annual plan. Act now. This deal won't last forever. Go to StrategyForgeJournal.com. That's StrategyForgeJournal.com and use code STRATEGY.